You probably haven't heard about this lately because it's not the kind of news that I guess people put out there. But check this out. The odds of recession this year, they've come down dramatically just in the last month. This is on most betting sites. This is Kalish from 30 to 31% from over 60% just a month ago. Now, my next guest agrees. He says the second quarter will be strong, but for the exact opposite reasons. The first quarter was weak. Let's bring in First Trust Advisors, their chief economist, Brian Wesbury. And Brian, so I know you are. I guess the question is, are you still seeing, or could the slowdown in the second half lead to a recession?
Charles, I look back over the last 4 or 5 years. Housing right now is the same place it was in 2019. And I'm not talking about existing home sales where people are locked in because of 3% mortgage. I'm talking about new home sales and new home building. Automobiles are selling no faster today than they were in 2019. Retail sales, if you adjust them for inflation, are still the same place they were 4 years ago. And so I look at these three big areas of the economy and I go, how did we grow 2% a year? And I think the answer is the Fed printed a lot of money and we were running massive deficits. And now the Fed money supply is flat again. The deficit is not where I want it to be, but it's not going to increase. Right. And you start taking those things away that boosted the economy. And I think we see a much slower second half of the year than people expect.
All right, so you just mentioned the Fed, right, and the debt, right, levels have grown. One thing we're going to put up a chart here for the audience because federal debt grew at a slower pace than GDP for a long time, right? You can see in this chart here, that was the norm, and then that all changed after the last, major recession, the great financial crisis, 2009. Where we saw, of course, the federal debt soar. It absolutely erupted, Brian. But here's the thing. So did the stock market. So did corporate profits. And it feels like, and the question I'm asking is, have we somehow, as a system, forsaken Main Street for the benefit of Wall Street?
Yeah, Charles, absolutely. If you go back to, let's just focus on the money supply real quickly. M2, the money supply, was $7 trillion in 2007. Then we had the 08 crisis, then we had COVID, and it's now $21 trillion. In other words, we've tripled the money supply in just 18 years. If you have a $100 bill in your wallet, 67 of those dollars were created in just the last 18 years, 33 in the previous 200. So guess what happens? The price of homes goes up, the price of equities goes up. And if you have assets, you win. If you don't have assets, that inflation kills you. And so we've bifurcated the economy. These policies to save us from these crises have actually made inequality a lot worse. And that's bothersome to me. And then at the same time, government spending has gone from under $3 trillion a year to $7 trillion a year, and we've run massive deficits. Most irresponsible government budgets I've seen in my lifetime were in the last couple of years. And I know you wanted to talk about the big, beautiful bill, so I don't want to steal that thunder.
Let's segue right on into it.
We're not going to fix it.
Yeah, let's segue right on into it. I've got one of the most recent posts here. President Trump talking about, repealing the EV mandates and the Green New Scam and the credits and spending. One big, beautiful bill, the biggest spending cuts in history. But you're not happy with this bill, are you?
No, I'm not. I mean, I hear, every time I listen to a politician talk about this bill, they highlight certain little things. But we're going to cut spending in Medicaid a little bit, in the Green New Deal spending somewhat. But we're also adding spending for defense and to defend our borders and to send people out of the country and all these emergencies that we have. And so what's happening is government spending is going to settle down, even with the big, beautiful bill, at about 22, 23, maybe 24% of GDP. So a quarter out of every dollar we produce. Back in 2000, when Bill Clinton left office, we were spending about 17 cents out of every dollar, not 25. If you go back to 1930, it was less than 3 cents of every dollar. So all we've seen is the government grow and grow and grow and grow. And the big, beautiful bill, if we look at spending, it is not coming down as a share of GDP. It's not going back to pre-COVID levels. It's not going back to pre-subprime levels. And that's, Republicans have been promising that for years.
Yeah.
And this doesn't do it. And then Elon Musk is not happy with this bill. He came up with all these cuts with Doge, and they're not following through with it. I'm with him. It keeps spending too high. Now, on the other side, on the tax side, thank goodness we're not going to raise taxes, and then we're going to add taxes on tip cuts, taxes on overtime cuts. Those are all good. I've never met a tax cut I don't like, all right, ever.
Well,
but it doesn't cut tax rates overall.
You know,
and
Brian,
that's the thing. When you put it all together, it's not Reagan again.
Yeah, no, it's not Reagan. I'm not sure if we can get there in this political environment and with the thin margins that they have. But one thing I do appreciate about you, we always learn something, and you're an amazing straight shooter. So we'll talk again real soon. Maybe after they pass it, I want to get your fresh assessment. Thanks, man.
All right, Charles.
All right,
Great to be with you.